time to do business. 55 minutes of business. That's what we do on Business Incorporated. For this episode of the program, here's what we have for you. The tariff is on with all of the consequences. The United States has revoked the visa for all South Sudan passport holders. In Ghana, the government is restricting state institutions from importing goods that can be produced locally. While Egypt is looking for ways to encourage small businesses, so they are seeking tax relief for small businesses and startups. Good afternoon, everyone. I'm Ini John Mekwa, and this is Business Incorporated. We start business as usual from the global space, where oil slid more than 3% on Monday, deepening last week's losses as escalating trade tensions between the United States and China stoked fears of a recession that would reduce demand for crude. So we see Brent losing 2.81%, down to $63.74 a barrel. WTI down almost the same percentage, and it's $60.14 a barrel. Of course, we know it's all about the trade war that started on Wednesday officially when President Donald Trump made that announcement. Responding to that, we see China on Friday said it would impose additional levies of 34% on American goods, confirming investors' fears that full-blown global trade war is underway and that global economy may be at risk of recession. Imports of oil, gas, and refined products are given exemptions, at least for now, from all of these tariffs. And then we go to the metal space. Gold prices held steady on Monday, and that's bolstered by strong central bank demand and the potential for an early U.S. Federal Reserve rate cut. But gains were capped as some investors sold bullion to cover losses in other trades. So it's a global village. If you think you want to edge with gold, you know, one way or the other, there's a connection. But look at the numbers now. Spot gold is down 0.2%, $3,029, 0.4 cents, losing a bit of less than 100 there. Or tens that made it more than 3,100 the last time we were here. U.S. gold is, however, on the flip side, 0.4% up, $3,046.20. Spot silver gained more than 2%. Is this where investors are hedging? I wonder. $30.18. Platinum is down 0.2% at $915.14. Palladium is up 0.5%, just 0.5%, $916.21 a barrel. Major stock indexes across the world plunged as U.S. President Donald Trump showed no signs of backing away from those sweeping tariffs. China struck back, as we already told you. Well, everyone has thought that by Saturday there will be some kind of negotiation, but nothing like that. In fact, the U.S. has announced that about 50 countries have reached out to the United States for negotiation, but we haven't heard any change coming from there. Well, gold was up over 15% this year, hit a record high, $3,167.57. That happened on Thursday, aided by that status as a safe haven amid all of the economic issues that we have globally. Let's come to Nigeria now. The Minister of Power, Bayo, has promised that the plan to install 3.2 million electric meters under the Nigeria Distribution Sector Recovery Program is set to commence this month, April. The initiative, which aims to significantly reduce the metering gap and end estimated billing in Nigeria, according to Mr. Delabu, takes delivery of the first batch of meters, 75,000 of them procured to bridge that gap. And then that will be followed by a second batch of 200,000 that should happen in May 2025. President Bola Tinubu has appointed Ayo Shotinrin as the new managing director of the Bank of Agriculture. Until his appointment, Mr. Shotinrin served as the group CEO of SAO Group, and prior to that as the CEO of SAO Agro, one of Africa's leading food and agribusiness companies that's focused on agriculture and agro-allied services. Under his leadership, the firm, SAO Agro, is currently developing a 20,000 hectare of oil palm plantation in Ondo State. Other value chains in its business include an annual poultry production and processing capacity of 5 million birds, alongside aquaculture, maize, and cassava. He further expanded operations across Ogun, Ondo, and Kwara State. Mr. Shotirin also served as the CEO of Sal Capital, where he led the firm's appointment as a sole investment and multilateral advisory partner to the Ondo State government. He's also served as a senior advisor on several high-level federal and state government programs funded by development partners including the World Bank, AFDB, DFID, USAID, and UNDP. He holds an MBA from Side Business School, Oxford University, an advanced undergraduate degree in environmental conservation and management from Oxford University, and an MSc in engineering business management from Warwick University. Well, back to the trade war. The Global Chief Executive Officer of Africa Program at the Lagos Business School, Mr. Patrick Akinwuton, believes that the ongoing global trade war is an opportunity for Nigeria to take its place as a leader in the African economy. He believes that with a 14% tariff on Nigeria from the United States, the country has opportunities in agriculture and textile for export. He was a guest earlier on Business Morning.
Needs to up its Pan-African game. Intra-Africa trade is only about 16% currently. This is an opportunity. We've been engaging with Asia, China in particular, India, from a distant position. Now that it's about fend for yourself, because the global rules-based trade order has been disrupted. As the Prime Minister of Canada said, the era of the last 70 years is gone. As the leader of Hong Kong or Singapore was explaining, the world has changed. And in Africa, we need to face a reality. And Nigeria has a major leadership responsibility and opportunity. Thank God that the reforms that has been implemented over the years has produced some Pan-African giants out of Nigeria. We need to intensify that. God knows what will have happened if we are still dependent on these blocks for importation of PMS as we were for many decades. We have a Dangote group, not only in the oil and gas, we have in the cement business, lots of businesses there. In the FMCG, we have capacity to serve Africa.
Well, looking at opportunities there amidst the global trade war. Well, let's find out, among other things, I mean, this is just a topic that you can't let go easily. So let's get the views of Kevin Emmanuel, economist, public affairs analyst, joining us from our Abuja studio. Kelvin, good afternoon. So I know this was not the original plan, but I'm just curious. You always get numbers and information. What are your thoughts about this ongoing global trade tariff that seems to be disrupting the normalcy that we knew or we've known before now?
Thank you so much for having me. It's always a privilege to be here. First of all, like, I wouldn't say that we didn't see this coming, considering that when President Trump came in his first term in 2016, he imposed tariffs, just that the size of the tariffs that he has imposed this time is more than what he imposed the first time he came. And when he nominated his Treasury Secretary, Scott Bessent, he came up with a 33 plan to increase U.S. output for crude. And the operators in America had a meeting with the U.S. president and said, you can't want low crude oil prices and then expect us to also invest in increasing the output for shale oil at the same time, because the unit production cost per barrel in America is high. So basically, with the tariffs you've seen, where he's placed a 25% tariff on some of the Asian giants, we placed a 10% tariff on Canada, and you know, he's exempted tariffs on oil and gas, even if the Asian giants are not having any part of that, because America currently controls about 26% of global LNG output and supply. you know. Well, the reality is that you're going to see lower crude oil prices. WTI is already below $60. Dated Brent futures are trading at about $45. So there is a chance that you might see crude oil prices drop, as it's currently dropped below the budget benchmark. Nigeria's oil price benchmark for 2025 appropriation is $75. There's a chance that you might see it even drop below the forward sale cumulative average for all the forward sale contracts NNPC has, with creditors that is owing, I'll say anywhere around 400,000 barrels of crude daily currently. And if that eventually happens, if it drops below the strike price for all those forward sale agreements, I think the only one where they had a debt service reserve account to provide a cushion in case there are events like this was for Gazelle 1, which was structured last year. And for all the other forward sale agreements from 2019 until date, I don't think they created any kind of debt service reserve account to cover downsides. So you're just going to see pressure on the Naira. Naira is going to continue to drop. The government will practically have no FX. It might even dip its hands through the JV schedule lifting for royalty oil to try to mark up. So it's going to be a very tough situation to an already very difficult macroeconomic situation we have in Nigeria right now.
Sounds like it kind of changed the face of the responsibility of Mr. Ojulari, who has just been appointed into the NNPCL. I wonder if Mr. Melekiari will say, oh, thank God, that I'm out at a time like this. But what does this do to the responsibility of Mr. Ojulari, who is now the group CEO of NNPCL?
Well, Mr. Ojulari is stepping into NNPC at a very, very difficult time because he was bequeathed a very, very horrible legacy by the outgoing GCEO of NNPC. Crude oil price production, daily output dropped from 1.9 to 1.5 million barrels within the intervening period. In fact, in the third week of February this year, the gas feedstock to NLNG dropped to 28% because there was vandalization of a major trunk line that was supplying its gas feedstock. Within the last 6 years, NNPC has structured $21.5 billion, and they have repayments for Leopard till 2029, for Gazelle 2 until 2034. So if you look at anywhere around maybe 714,000, 720,000, which is the share of what NNPC gets from all these cumulative average as a joint venture partner for Profit Oil, and then the PSC, and then the sole risk for financial technical service agreement for the blocks it controls directly. Anywhere around maybe 150 to 180,000 is committed as tax oil and royalty oil that goes to FIRS and NUPRC. So your profit oil, you put it anywhere around maybe 450,000, 480,000 barrels. About 85 to 90% of it is committed already in loans that it cannot be explained. So how is Bayo Ojulari going to navigate lower crude oil prices, and at the time also when he's trying to convince IOCs to open FID? ExxonMobil and its partners Total and CNOOC are supposed to commission a $10 billion FID on the Wowo field that at its peak is supposed to produce about 180,000 barrels of crude. Bonga North is already, they started doing field development, and they're supposed to achieve first oil anytime around 2028 and 2029. Ojulari is going to have to balance between, the budget projections and assumptions of the government that has been thrown out completely. The president has to basically come up with a supplementary budget, or else there will be a financial crisis in Nigeria, and the Naira is just going to be on the free fall. He's going to have to look at review the contracts on the modified carrier agreements that are structured for sales. He's going to also have to look at the DCSO, sections 109 of the PIA, and how he's going to, solve the impasse between NNPC and Dangote, the relationship that has been horribly, horribly managed since Dangote started refining in 2024. considering that NNPC is a shareholder in Dangote. It's going to have to look at the strategic direction of unbundling NNPC to the markets. Look at all the reservoirs, look at the judgment debts, look at the encumbrances NNPC has. You have to do like a complete shakedown and review the portfolio you have, the assets you own, the shelf life of the assets, the maturity of the wells, captain wells, temporarily captain, permanently captain. All these are things that he's going to have to first consider. So you bring in like external auditors to really audit the books of NNPC before you take it to book runners to start the process of price discovery and the pricing of the stock and all the process that you have to go through to go to an IPO. So Bayo Ojulari is going to he's going to have a difficult job. I don't envy him. It's coming in at a very difficult time. And the current drop in the price of crude oil doesn't really help him at all. It doesn't help him.
So
I wish him good luck.
You talked about, the relationship with Dangote, and it's important, as you noted, that NNPC is a shareholder in Dangote, so there should be a smooth relationship. But even looking beyond just Dangote, for instance, the crude for Naira was supposed to be for local refiners, not just Dangote. Now, that seems to have been only to Dangote, which, we've seen the result of it now. How do you see him navigating this relationship and the need, to give the local refiners more crude in spite of the obligations that they have outside the country?
Well, first of all, I will encourage him to go and visit the Dangote refinery because, the past management, Mr. President that is currently in France, has not visited the Dangote refinery. His cabinet members has not shown any sign that, they encourage the project. I'll encourage the Bayo and his team to actually go to Lagos and visit the Dangote refinery. And also maybe take the Minister of Power, because Dangote has about anywhere around 180 to 200 megawatts of excess power generation capacity that he can ring fence and plug into the Lagos grid. Okay? So let him actually do a familiarization tour of the refinery and see the scale of the investments that went in. And, so that he understands that NNPC should not be competing with Dangote, right? NNPC currently operates a vertical model. And in the PIA says that unless you operate an integrated energy company model, you're not supposed to run the same business across upstream, midstream, and downstream. NNPC has an unfair vertical monopoly over its competitors in the oil and gas sector, okay? Just the same way, for example, that Dangote, as he is, cannot go and say he wants to get a license to open filling stations in the downstream sector because he's already in the midstream sector, right? This is the reason why right now NNPC needs to do a review of his portfolio and assets, all his subsidiaries, and ask themselves which subsidiaries are most valuable subsidiaries making us money, which ones are not making us money, what assets are alive, what assets are dead, what assets are a going concern, what assets are not. And I can tell you for free that the $2.4 billion that was used for turnaround maintenance, which in my opinion, the EPC was overvalued by 4.5 times, was a waste. NNPC refineries are not working. NNPC needs to transit from competing with Dangote to actually exit the midstream sector, double down on the Dangote refinery. They missed a chance to buy up 20%. They own 7.2% of the Dangote refinery. If they had bought 20%, they would have been owners of a fifth of an investment that has a chance of generating between $25 and $30 billion in revenue on a yearly basis. So the biggest question Nigerians are asking is how can Dangote get crude oil feedstock from the Nigerian market? How can you obey domestic crude supply obligations, sections 109 of the PIA? How are we framing sections 317 of the PIA? Is the NMDPRA, for example, as a regulator, do they actually have an empirical model for calculating basic daily consumption that forms the basis on which you know how much Nigerians consume on a daily basis, and if you should keep giving import licenses to people who are currently importing, or you should withdraw their licenses because Dangote has exceeded the daily consumption of Nigeria at 44 million liters of PMS is doing on a daily basis. So Bayo's work is to familiarize himself with the refinery and look at all the other refineries that are operating in the midstream sector, the modular refineries, see how he can provide them crude oil feedstock, like backwardly integrate all the consumption that Nigeria has, and then export the net difference for FX, because Nigeria needs FX. And you know, I'll tell you what, Ini. The other day, the CBN came out with a press statement and said that they have net foreign exchange reserves of about $23.1 billion. And I said that I don't agree with it. And the reason I don't agree with it is because now that you have crude oil prices coming down and you don't have a leg room of FX to use to shock the demand in the market and the pressure that you're going to have on the Naira, it's going to be a test. Because how do you have net foreign exchange reserves of $23.1 billion and you're structuring wholesale agreements of $9.5 billion through crude oil swaps to fund the payment obligations that the CBN has within the next 2 quarters? You know, so Bayo's job is to realize that the market has moved and the model we're operating of benchmarking to OPEC quotas on a monthly basis is outdated, it's stale. You have to solve the demand for crude to your domestic market, refine, meet the local consumption, export the net difference, and bring in those net export proceeds for balance of payment.
All right, Calvin,
you know,
let me just
than exporting raw crude oil out of Nigeria.
Calvin, just help me clarify. You're saying that NNPCL should not be, according to the law, be operating in 2 segments of the same industry. You know, that's why you gave the example of, you know, if Dangote shouldn't be able to get licenses to have filling stations and all of that. I just need clarification on that.
Ini, according to the PIA says unless you're an integrated energy company, you can't operate the same company with the same name across the upstream, midstream, and downstream sectors. Right? Dangote, that is currently in the midstream, with the same name, company name, if he goes and he applies for a license, you know, get OML blocks upstream with the same name, Dangote, Industry Limited, or he goes to NMDPRA and applies for a license with the same name, Dangote, they will show him the section of the PIA that says that unless you're an integrated energy company, they are not going to give him a license. So if Dangote has picked a struggle and said, we're going to stay in the midstream sector and try to beneficiate on the crude oil into refined petroleum products and solve the energy demands of Nigeria and solve the energy security gap that Nigeria has, then it should apply for the other players, because NNPC is not a regulator. NNPC is a company that is subject to the Companies and Allied Matters Act and is also subject to the PIA. So if you have a situation where one company is able to influence government policy to favor it and gives it unfair advantage by running a vertical monopoly over the other companies, then it's unfair competition. And I'm saying to you, Ini, that NNPC should not be competing with Dangote. NNPC is a shareholder in Dangote. There's nowhere in the world where you invest $1 billion in a company and then you try to sabotage the company by not supplying a crude oil feedstock or by engaging in practices that are not in line with the Petroleum Industry Act.
All right, Kelvin. I mean, we're almost out of time for this segment, but I think one of the, you know, very demanding parts that Nigerians should be looking forward to is NNPCL heading to the markets. It's a promise that was made, I think, about 2 years or more ago. We haven't heard the details of it. I think the last time we heard of it, one way or the other, confirmed or unconfirmed, all the details are. Have you heard anything? Or how do you think this new leadership can actually accelerate that, you know, path to the market, the capital market?
First of all, NNPC needs to do a comprehensive review of its assets. NNPC is supposed to have about $160 billion in assets. Yeah? It has proven reserves of 38 billion barrels, for example. It has gas reserves of about 209 trillion standard cubic feet, right? NNPC first has to look at its books and ask itself, what parts of our company are going concerns and what parts of the company are not going concerns, right? It needs to audit all the joint venture, unregistered joint venture agreement. It has all the PSCs, the ones that were structured before the PIA was signed in 2021, the ones that came in after the PIA was signed, all the judgment debts, all the contingent liabilities. You know, for it to do that, it needs an external auditor that it has not engaged before to come in and do that comprehensive audit. That, in my opinion, that will take anywhere between 3 to 6 months at the minimum if they are very quick with their work. When it finishes that, it now has to now appoint like book runners, investment banks to start the process of, you know, valuing their assets, pricing their assets, and then, you know, actually underwriting the securities to go for an IPO. It's a process that it will take at least 12 to 18 months. That's why I was a bit shocked and surprised when a few weeks ago, a press statement was released from the TOAS that said that they are the final stages before an IPO. It was a bit shocking because all of this process has not been done. And, you know, most importantly, NNPC needs to, you know, pay attention to Section 65 of the PIA that suggested that they transit from unregistered joint ventures and production sharing contracts to incorporated joint venture company model. And let me tell you why this is very, very critical in it. The bread and butter of the state-owned enterprise is in exploration and production for oil and gas. Today, as we speak, over nearly 5,000 staffs drawing more than $500 billion in emoluments per year do not have the technical capacity to directly produce crude oils themselves for the fields that they own. For the joint ventures they have with operators, you know, members of IPPG, the IOCs, right? About 47 of them that are currently active. They have a cumulative average of ownership of anywhere between 51.3 and 57%. Okay? When contracts, when field developments are going to be financed for them to open new final investment decisions, what typically happens is that these companies end up providing 100% of the funds because NNPC is not able to finance their own share of it. So if you own, for example, 40% or 60% of a block and you're finance capex and you're not able to finance it, they end up carrying you and then they take carry oil and they get waiver on that carry oil, right? If you move to an incorporated joint venture company model, right, you basically will now have to rely on project financing. So if there is a project to develop, for example, Bonga North, just for example, and NNPC owns 60% of Bonga North, NNPC will be obligated to bring $3 or $5 billion. Project financing will help it bridge that gap. But the only way that the markets can trust NNPC to provide project financing, to operate an IJVC, you know, and create more transparency in the way the fields are operated and the amount of profit oil that comes to the government is for you to go to the market and have the highest level of corporate governance and transparency to shareholders and the board.
All right.
Okay? So we need to transit from this old model of, you know, UJVs to IJVC as a way to increase production and drive investment upstream for oil and gas in Nigeria.
All right, Kelvin. I know that you would have so much more to say, but I mean, let's just draw the curtains here for this segment. Thank you so much for painting a picture of, you know, the responsibility that could be ahead of the new NNPCL group CEO. Thank you so much, Kelvin Emmanuel, public affairs analyst and economist, for your time.
Thanks for having me.
All right, it's, well, bloodbath, I think, is what they call it for the markets following that Trump tariff announcement since Wednesday. I think it got worse over the weekend. Calculation of what the market lost to different parts of the world has been terrible. Those are investors' money, you know. I don't know if Will's money is part of it, Will. I don't know if your money is part of this.
You got me there. I wasn't expecting that.
Expecting it, but I mean, these are investors' money. You know, people are losing money. I don't know if it's a short-term thing or it's a long-term thing, but the thing is, people are losing money now.
They're losing money.
And a lot of investors, some investors are not very patient
They might want to, sell off at this point and they lose
even
more. So
Ethereum is less than 1,500.
It's not what we expected. Let's say it's quite unprecedented. All markets are reacting.
Yeah.
It's just a knee-jerk reaction.
Including the NGX.
Including the NGX. Right now, we see it in the red.
But I don't know if it's the Trump tariff that's affecting the market.
But for now,
we were on the red zone before the announcement. So let's not put everything on President Trump.
We'll just hope it's not President Trump. Because Nigeria's market, has a mind of his own.
We are on our own.
We are on our own, definitely. So let's see how major equities we track in Africa. It's quite on the screen there. See red at intraday. Nigeria's NGX was down 0.38% at point, 0.38%. And we see it at 105,000 points down. GSE in South Africa is also down 0.28%, still reacting to Trump's tariffs imposed on Southern Africa, which has taken the chunk of this tariffs. Now, let's look at Egypt at intraday. It was down 1%. The reactions are just massive. But Kenya closed Friday's session in the green. That's more like a lone gainer there, but that's Friday's session. But let's dive deeper into what's happening at the NGX. And we're bringing in Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Good afternoon, Ambrose. It's good to have you on the program. Ambrose, it's good to see that the markets are reacting to all of this, but looking at Nigeria's NGX, we see that the stocks that brought down the market were mostly the oil and gas stocks and the stocks in the banking sector. But we see O&O dropping down there. We also see stocks like Total, except for Total, which had a gain at intraday. What is happening with the oil and gas sector? Are we seeing sell-offs because of the 14% U.S. imposed tariffs on Nigeria, saying that we are, crude oil dependent, and that's our major exports rather?
Yeah, for me, what is unfolding generally in the market and the economy globally is not because I believe that Trump have just triggered opportunity that will also make some economy, also mind some economy. But I believe that for the market that are really, on the red, so just last week we saw like a bloody market, or call it a, bloody Friday. That to an extent, then most of the matured economy, put Nigeria is not left behind as we speak now. But the beauty of it is that many investors and also corporate bodies are looking inward. How can they take advantage of the pullback? Don't forget that in 2008, we also saw a meltdown, which was a global meltdown, which I believe many people learned from that. And also saw the COVID-19 meltdown, center of pullback or sell off, whatever I call it. But now we're seeing another trade war fear, or fear of global recession, pulling stocks down. But I'll tell you that this is a pure wealth transfer, I'll say. But it's for now for those that understand how to trade or invest advantage of the pullback. Yes, it's not time to say we are buying the dip, because we don't know how far the market will go down. For many big companies, great companies, oil companies are being reviewed by this trend. What investors should do, like we just said, in the oil sector, I see that crude oil prices have dropped below 4 years low, which is also a sign that when the global managers also come together to see how they solve this issue, that will be the set also that will rebound fast. I will tell you that. We have seen that in mature economy, banks are hit. We see many banks there, in red. But here in our market, most of our banks are not as volatile as we are seeing there. But we have seen that numbers that came from this bank to the strength of this bank, and also pointing to where the banks are going. For me, I believe that it is a test of what opportunity that are going to the market, and also a test of the kind of economic managers or policy makers who have in Nigeria, to see that how they can take advantage of what is happening to take Nigeria to the next level, not to lament. Because if a manager or policy maker give you time now to think, how can I make policy that will put my economy in the right? Because I said earlier, this trend will mark or make some economy. Now, let's take advantage that Nigeria, well, yes, we don't depend more apart from our crude oil. It is time that we are seeing some sectors in Nigeria coming up gradually. It's not for government to boost the sector so that we also can also become an exporter. But I believe that most mature economy will be looking at the new market and new place. Also like us, let's look at also where will be our new market, where are we going to strengthen our own economic strength for us to also compete with what's happening in the world. I believe that what is happening is for us to take advantage of it at this time. And like I said earlier, it's an opportunity and also a time.
Ist das Julianas Box hier, dass du 20 cm größer wirst?
Du kannst sie einfach wegschieben. Ja, wir hatten vorher die Sportschalte, die neue, du weißt. Chris ist ja nicht mehr da.
Ja.
Und die ist ja doch.
Okay, so analysts have said that what's really happening in the market now is a result of fear more than fundamentals speaking here. But looking at the banking sector in Nigeria, we've had some dividend announcements, but so far, investors do not appear yet to be taking position. And what do you say to this, Ambrose?
No, like I said, anywhere, anytime, any day, anywhere in the world, fundamental and technical is what, a successful investor or trader have to combine to make decision. Fine, you can't separate the economy from the market, but you have said that we have seen, some banks releasing results, and these results beat expectations. These banks are growing bigger, and we're seeing that also they are, kind of went to the market to collect a fund to, become a bigger bank. That's fund going to boost their performance. Now that most of them are golden structure, I see, a bank that are institutional that coming with a bigger opportunity to make money. For me, whether the economy is shaking or global economy is shaking, financial sector remain the engine of any economy across. That means we must pay attention to it. Any pullback in this market is an opportunity to buy into value. Even though most of them have increased their share in because of the primary activity, the numbers they are putting will support, higher price going to the future. Even when policy direction changes of monetary policy, I think that these banks are ready to make money because if they are sitting on what hot money now to run. That's why I said earlier that police managers or economic managers of Nigeria or policy makers should look inward, because if we're having a financial sector that is still on kind of money the economy, what we are saying now, we need to make policy that to drive your own economy, not seeing what they're on that, because this time now, if the economy is on their own, that's why you see that China trying to look inward, Europe, and the next Nigeria also look inward because of what we are seeing, because this fund that the banks are raising an opportunity for us also to drive the 1 trillion economic expectation of the government.
Okay, so Access Bank lost about 1.65 kobo at intraday, and I will see waiting on Access Bank's dividend announcement. Why do you think investors are taking profit or selling off on the stock ahead of that dividend announcement? Is there any particular reason?
Yeah, actually, the ones that have announced with dividends, we have not seen no sign of fantastic reaction to them. For assets that have delayed this time, that is market for you. Sentiment will be there. Not that assets is going under one problem or the other or under stress. No, it's just market sentiment. Our eyes on assets result. Pull back for me and I said it's an opportunity to buy into value, because I see assets, going, what would I put it? Going beyond expectation. Why? Because they have come out to say that 2025 is the is the year they are stopping all their acquisition, so that they start getting value for investors. If that is true, I'll tell you that by 2026, numbers that compare assets will change. Then they will now spend less in acquisition and now look at how to solidify the operation they have across Africa and Nigeria and other domain. I believe that this is also going to buy their bottom line. Any pullback in assets is an opportunity to buy into value.
Okay, so obviously I'd say the market will close in the red because of the numbers you're seeing. But what are your expectations for this week, Ambrose?
Yeah, for me, the market, like you just said, the market will be in red today. But I believe that for the week, we're going to see also kind of oscillation in the market. Also, market might likely close there because the first quarter that will change the trend, going to start hitting the market are from the third week and the last week of April. I mean, I see the market closing red for the week.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for joining us on Business Incorporated.
Thanks for having me.
Let's move on to other markets now. In the Middle East, we saw major stock exchanges mostly negative at intraday. Dubai was down more than 3%, 3.29% to be exact. Abu Dhabi not far off, 2.54%. Still within the region, Saudi and Qatari indexes traded in opposite directions. Saudi was a lone gainer at intraday. We saw it up 0.78% and Qatari index down 0.35%. Let's look at U.S. stock futures now. We see it hard hit, today in pre-market traders. President Trump's high tariffs sparked a historic market meltdown. The S&P 500 futures dropped 2.27%, and we saw it nearing bear market territory, in today's trade, while Dow Jones and Nasdaq futures also lost significant ground. See it all red on the screen there. And sell-off is continuing. This is continuing from last week's sell-off. Now, market wipeout was unprecedented, as I mentioned, with Dow Jones losing over 1,500 points in back-to-back days. The S&P 500 posted its worst performance since the pandemic, while the Nasdaq entered a bear market, down 22% from its record high. Trump's 10% tariffs went into effect on Saturday. They started collecting, and while investors hope for negotiations, the White House remained firm. Trump says the tariffs would not be postponed, and China's retaliatory 34% tariff on U.S. imports has further rattled investors. Now, JP Morgan CEO Jamie Dimon says Trump tariffs will boost inflation, slow an already weakening U.S. economy. And let's look at Asia markets now and see how they performed at the close of business today. Steep decline for those stock markets in those places. We see Asia very down at the close of trade. We see it triggered by the global trade war, by Trump's tariffs. And we also see Japan's Nikkei hit 18-month low. Look at 18, down 7.83% to close Monday's trading session. Kospi in South Korea down 5.57%, and the Hang Seng Index in China 13.22% down. The Hang Seng Tech Index is also down, plunged 17.16%, and mainland China also fell 7.34%, and marking its largest one-day loss since October. Now we see India's Nifty is also in the red, 3.24%. Experts are keeping an eye on the U.S. and China to see if there's going to be any face-off, the moves they're going to be making, and that will determine what line they're going to be taking or decisions they're going to be making, along with Europe's, the EU's potential response to President Trump's, tariffs. Also, political tensions rising. This is all impacting the volatility in the markets, and investors are rattled, really rattled. Concerns are there that it might not be temporary. They're looking at a long-term thing here, and so a trade discussion, negotiations, possibly exemptions are hoped for here in it. So looking at all what is happening now, some countries in Asia say they're not going to retaliate. Some are saying, well, China says, of course, China's retaliating and rejecting what is happening. And so we are seeing that reaction in the market. Actually, the Hang Seng was really down, over 13% down. It is really massive.
Yeah.
We wonder if they're able to recover from these losses, how quickly they're going to be able to recover from it. And Trump says this is a beautiful thing, Yeah,
well, there's so many sides to it. I mean, because even the U.S. market is feeling it. The threat of recession seems to be coming closer, even though we saw the U.S. Treasury say there was nothing about recession coming.
Well, Goldman Sachs has raised that to 45% from 35%. So
it depends on whose report do you want to believe.
Okay.
But the reality is knocking on the door. Everybody is seeing it, and we know what happens in the area. I mean, we don't know what Europe is going to come up with, and we know a lot of services go through Europe and the United States. So, I mean, they also have a hedge there. But, I mean, we'll just follow the stories and see what happens.
Just follow it, Tini.
Thank you, Will. We're talking about Europe. They say the United States started the trade war, so it's not their fault. And the effects, of course, can be felt around the world. We see the markets, investors everywhere. Europe has promised that they have something cooking as a way of responding to it. I wonder what they have. But let's find out from last now what conversations going on there. Perhaps what plans Brussels has. Good afternoon. I believe that Brussels spent the weekend cooking up its plan, even though they're not ready to tell us yet. But have you heard anything?
Indeed, Ini, thanks for having me. It's good to be with you again. No, I wish I could tell you more details, but they're not out. As a matter of fact, the Foreign Affairs Council in Brussels is actually currently in the meeting, and we should expect something this afternoon. The last thing we have heard and we have seen is Robert Habeck, Germany's economic secretary, last week showing off a thick bundle of papers saying this is what will be discussed, but that's about it. There's a few measures, of course, that many people think will come, and some of them are concerning tech companies. So let's have a look at two that I find interesting. One is, and I believe we talked about that before, that of course some of the US tech giants, Apple, Google, Facebook, Microsoft, over the past years, they have really paid very, very little in taxes in Europe, thanks to some loopholes here, and the EU wants to go after that and close those tax loopholes, and that could cost those companies billions, many, many billions of dollars. But there is one other company that is most closely tied to President Trump per its CEO, and that of course is Twitter, or X, I should probably say. And with Twitter, it seems the EU is working on a special surprise fines reaching up to 1 billion euros for breaking an EU law to combat illicit content and disinformation. That, of course, would be the Digital Services Act, Ini. However, imposing such a fine would most certainly further antagonize the US by pretty much attacking Elon Musk and then by fiat President Trump.
Yeah, because, I mean, it's a thin line between the trade war and actually putting a fine on X at this time. But what's behind this fine?
That's worth taking a closer look at the law here. The Digital Service Act, or DSA, as it's commonly known, it requires companies to better police their platforms and to provide adequate transparency about how their services work. Now, regulators say that X was violating that law by refusing to provide this data to outside researchers, making it difficult to measure how disinformation and other harmful materials spread on the service. And obviously, we've seen a lot of disinformation. Again, I'm sorry. Fake news and especially hate speech on X ever since Elon Musk turned the platform into a right-wing propaganda tool.
Well, it sounds like this is all not really connected to the tariffs, even though, you know, one might say that with the sentiments going round, perhaps this is just an excuse, you know, to hit back at X. And we know Elon Musk's relationship with President Donald Trump. But is this really not connected to the tariffs, Lars?
That is a very interesting question indeed, Ini. Brussels now is making it very clear that any fine they would impose on X would have nothing to do with tariffs. Obviously, as the Digital Services Act is a law on the books anyway, and they're just enforcing it. But Donald Trump himself has, of course, said that he's looking to make deals, like offering China a rebate on these tariffs if they agree to sell him TikTok. So I don't know, maybe we have to look at things like that on the European side as well. Lower fines maybe for lower tariffs. It is worth noticing that Elon Musk over the weekend has come out strongly against US tariffs on Europe. Is that a coincidence? An official EU announcement on these fines is, for now, not expected until summer. So that confirms, Ini, what we said before. We will be dealing with tariffs, with threats, and with surprises for weeks and for months to come. And that, of course, is a disaster for companies, for markets, for investors. And we're going to be in for a wild ride for just a bit longer.
Yes, unfortunately, that's the reality we are in. So I don't know if I need to ask you about the markets. I'm sure the markets there are also bleeding.
Yes, absolutely. The bloodbath here continues. Starting in Asia, of course, as you had on the program earlier, Hong Kong down 12%. There was no surprise at all that Europe is falling again. And we saw the DAX down over 10% in the early morning trading. Officially entering a bear market. Now it has rallied back a little, now down only 5%. Literally, of course, nothing else matters to investors right now than this tariff talk. They were looking at Asia, where the bad markets here, the weakness in the market is directly related to the escalation with China, of course, and looking closer to stocks here, it is, of course, the same thing. Last thing we've heard in the whole EU-US matter is Trump said he is not interested in negotiating with the EU, and EU tariffs are, of course, set to hit back later this month. So here we are. Meanwhile, economists have been going through some details, and they're saying they don't find it realistic that the US government could possibly hammer out individual deals with so many nations as to avoid a global economic meltdown. That's pretty much what markets are preparing for, although now with losses approaching 20% over these 3 days, it is not unlikely that very soon, maybe tomorrow, maybe Wednesday, we see a little bit of bargain hunting, and some are saying that after Black Friday and then Panic Monday today, maybe it's a little bit of a turnaround Tuesday tomorrow. Really hard to say.
Yeah, I think every day should have a name now. Black Friday, Panic Monday, Turnaround Tuesday. Last, please get the name for the other days of the week. Well, thank you so much,
We'll find something.
Yeah, I trust you. All right, do enjoy the rest of your day, Lars.
Thank you, Ini.
All right, now it's still about the tariff. Now, the Trump administration has stated that it will revoke all visas, including F1 student visas, H-1B visas from South Sudanese passport holders, and block any arrivals effective immediately. This, according to Rubio. South Sudan's transitional authorities have failed to respect the principle that every country must accept the timely return of its citizens when another nation, including the U.S., seeks to deport them. So the Biden administration granted South Sudanese people temporary protected status, which is offered to foreign citizens who are unable to return home safely due to several reasons, including war and natural disaster. Well, the current designation for South Sudanese nationals will expire on May 3rd, and it seems they do not want to take their people back, and the Trump administration is hard on this. The South African government has proposed an increase in several taxes, such as value-added tax and excise duties, as part of its fiscal strategy to generate additional revenue and address public health concerns. In the 2025-2026 budget, the government proposed to increase VAT by 0.5% points in each of the next 2 years, bringing VAT to 16% by 2026 and 2027. In addition, excise taxes on alcoholic beverages are set to increase by 6.83% in the current fiscal year. And the Southern African government's proposed tax hikes in VAT over the next 2 years, an increase in excise duties on alcoholic beverages, have ignited debates on their broader economic implications. And then in Ghana, the government is set to introduce a new policy that will require state institutions to purchase selected goods, including rice and sugar, exclusively from local producers, unless they obtain special approval from the Office of the President. The Minister of Finance, Dr. Cassil Atto-Forson, announced the measure during a meeting with the leadership of the Association of Ghana Industries, describing it as a part of broader efforts to strengthen local industries, create jobs, and reduce Ghana's reliance on imported goods. And Egypt is offering expanded tax relief and financial incentives to small businesses, startups, and first-time taxpayers as part of its efforts to support entrepreneurship and broaden the formal economy. In remarks delivered during an open dialogue with the Federation of Small and Medium Enterprises and Provincial Investor Association, the Finance Minister, Ahmed Kochaye, said that the government views the SME sector as a core partner in the success of the country's first phase of tax facilitation reforms. And in Zimbabwe, the government is championing the cultivation of sunflower through a program in an effort to boost the country's oilseed production and enhance food security. With the country's import bill for crude oil exceeding $200 million, the government is working on strategies to reduce the bill and increase local production. With that, let's head to the crypto space. The color of the story isn't different, even here in crypto. Fact, it's gone less than 80,000. I thought we were complaining when we had 82,000 last week, but it's now at $76,802.60 for Bitcoin. In 24 hours, we've lost about 7.5%. Ethereum is down. Oh, I actually did see 1,700 before coming on air. I didn't know it had gone down to 1,400, less than 1,005. So 1,485 for Ethereum. XRP also down. Wow, it's a very red market. Let's have Rume and see what Rume has to say about this. Hi, Rume. Good afternoon. Welcome to the program.
Good afternoon, Edie. I was expecting you to wear a red shirt today, but you didn't.
I don't want to make the matter worse than it is. We have enough reds. I think if I had a red on, we just see blood on the floor.
Exactly.
Yeah, but this is all about the tariff. I thought crypto should be a hedge or something.
The truth is that a lot of institutional investors have actually come into this market, and they've actually brought their bags, and that's the disadvantage of having Wall Street coming into. But it's also a good thing. But the flip side of it is that everyone right now is at the mood of wait and see what is going to happen, you know. And with that, those that have their assets in huge amount will always take it out so that they don't lose the opportunity to even make more.
But where are they taking it to, Rume? If they're taking it out of here, gold is bleeding, stock market is bleeding, bonds are bleeding. Where are they taking it to?
so most times in cases like this, people are most likely going to put their money in cash, other as an hedge at some point. But really, a lot of people see that as the best way when things like this happen at some point. But most especially those retailers mostly just run away from the whole system because they really want to be safe. Because the truth is, when you are away a bit with all of this challenge, when you are coming in, the tendency for you to make more is really high. But the fact that these are happening now, a lot of people will most likely switch to stable coins like USDT and USDC better than just leaving it to be experiencing all of the volatility that causes some challenges to the entire market. You know, I think a lot more things are still going to happen because there's going to be more like a retaliation at some point. I think I heard that even the Chinese market is actually bleeding very hard, and when
Yes,
that
they
happens,
are, the Asian
it's
markets.
actually send shockwave to all other parts. Maybe,
So,
I don't know, maybe Nigeria is going to sanction the US.
I wonder with what. But you know, so the conversation going on there is that there are opportunities. There's going to be a new normal in trade circles and all of that. But I wonder where crypto will be in the midst of all this new normal that it seems the world is trying to form. Where do you see crypto, you know, getting into?
All right, thank you very much, Ini. It's a very fantastic question you asked. The truth is that in this new normal, it's already taking place, seeing different ways of making payments. Before now, you go to the bank and they'll tell you there's no network, you have to wait till there's network. But now, with all of this innovation, just the click of a button, you make payment, most especially stablecoin payment. It's also said right now that stablecoin payment is usually being made from jurisdiction like Africa, because we find it difficult to make either people sending money home or paying for goods and services apart from outside the world. You know, so stablecoin payments or buying things online rather than use a conventional way, you just use a stablecoin, which is either pegged to the US dollar or pegged to in our own case now we have stablecoin pegged with the naira, which is the CNGN.
All
you
right.
know, so which makes it seamless.
Okay, well, we'll see what happens to our stable coin in the nearest future. Remain, thank you so much for your views this afternoon.
Thank you very much.
All right, it's a tariff world we're living in, that new order we're talking about. Can we see it soon? Let your country decide or your government. But that's it on Business Incorporated. Thank you so much for being a part of the program. Really happy to have you there. But it's better because today is Monday, so we have more opportunities this week. I'll be back tomorrow, God's grace. Bye-bye.